Hi, how you doing,
Hi.
Kim?
Good. How are you?
Not bad. Thanks for making it. Welcome.
Yeah. Hi.
So, shall we start?
Yeah.
Um, and Kim, would you like to say something about yourself, first of all?
Yeah. So my name is Kimberly Jane, and I teach psychology at a small little university. And I'm also a mental health therapist. So I'm really passionate about trading and psychology and investing and finance. So that's where my heart lies.
Okay. So I'm going to start with my first question, which is uh, sort of what qualities do you bring to your trading in terms of sort of as a mental health counselor and teaching psychology? What kind of things do you bring from that into your trading?
I think the most important thing that I bring into it is being able to understand looking at who I am as a person, because each trader is different. We all have our own personalities and, different cognitive biases and different emotional triggers, so to speak. And so for me, it's having that psychological background and that counseling background so that I can actually look at my own self-reflect and go, I need to slow down maybe because I am an extrovert. So I talk fast, I think fast. And so for me, there's a lot of research that shows that people with my personality, we tend to think quickly, get out of trades too quickly. And so knowing that, it helps me to slow down, think more about a plan of why am I doing this strategy and training? What is my goal? What's my purpose? And therefore make a more educated decision when I'm placing and getting out of a trade.
Thank you. So, and that leads me to my second question, which is, um, besides sort of coming across the Liz and Jenny show that you told me about previously, what attracted you to options trading specifically? Was there something about it? Was there a sort of eureka moment that provided?
Yeah, definitely. So in about 2017, um, I had been with a essentially a financial advisor, stockbroker. And he really encouraged me, Kimberly, you can manage this portfolio, this one portfolio you have yourself. So, but basically it was buy and hold long-term stocks. And he didn't really give me the strategy of, well, how do you mitigate your downside if the market goes down? Or how do you protect yourself or hedge? And so during 2018, we had that big down move when Jay Powell tried to increase interest rates in 2018 and also at the same time tried to implement quantitative easing again. And I'm sorry, quantitative tightening, my fault, which is the opposite of quantitative easing. And that was September 2018. Well, I just started seeing my portfolio, you know, drop, go down, good quality stocks. So the only thing I knew to do was you either sell your stocks and go into cash, or you stayed in them and you kept watching them go down. And so it was Christmas Eve. I don't know if you remember that. Christmas Eve 2018, when basically it was like the worst time period we'd had since 1931 of the market moving down so fat quickly, and like the worst Christmas Eve since I don't know, there was like these huge statistics behind it. And it was at that moment that I went, there must be another way. And so that is when I started learning about options. I think I'd seen it on CNBC with the Nigerian brothers, I apologize. And from there, that's what led me into learning that options and futures can be used in multiple ways to basically protect the downside of your portfolio or to give you alpha in your portfolio.
Thank you. That makes a lot of sense when you say it like that. So, um, because yeah, as you say, it's I was intrigued as well that um, sort of so you seem quite content with your trading style, and using options as well to hedge. If you could imagine you trading, say, a year from now, what would you expect to see? Any changes, or would it be about the same?
Yeah. So when I first began options, and this is really a disclaimer to anyone watching this, I did not know what I was doing. So I just bought a call, bought a put, um, and made some money on it. And then in the 2020 downturn during the COVID crisis, I started, this was just my intuition. It was just I didn't have a lot of experience with it. I was trying to learn, but I was very novice. I started just buying puts
Okay.
in the HYG, JNK, SPY, Q, all over the place. And I ended up like 6% up during that downturn, not because I was so great at it, but because I started seeing that the market was turning. However, from that, I was heavy in cash. And when we had that V-shaped recovery, I wasn't keeping pace with the market because I didn't think that the market was going to turn around that fast. So while I was up 6% during COVID, I was definitely not beating the market that year. And so right now, the biggest strategy for me in options, when you're talking about where do I want to be a year from now, from these experiences, it's really learning to balance my risk.
Okay.
And I've gotten more conservative in how I trade options, and I need to stretch myself to be more of a risk taker, and how to scale in to bigger position sizes, because that's, I would say, where my weakness is I don't scale in and I just trade very conservatively. So I need to find that balance. The pendulum swings one way, then the pendulum swings the other way. So it's finding that balance of, and I think women in general, and I'm making a statement, tend to take less risk, but I need to push myself in that way and get better at different, there's so many different option strategies. You can play it so many different ways. So, I have a few things that work for me, but expanding my options kind of language and repertoire, or I guess that's the right word.
So, is it something that you developed yourself, this kind of mixture of options and futures, um, or through following somebody or being mentored? Sort of, how did you come to it?
So the futures are we're a little bit of a different trajectory. My husband was a S&P futures trader for many years on the Chicago Mercantile Exchange. And so, but he wasn't really using them because once he was done with the trading floor, it's a very stressful environment. And he just wanted nothing kind of to really do with trading. So in this whole process where I'm saying hedging, protecting what the piece of our portfolio that I was managing, I started seeing futures and I started asking, hey, you used to trade these, can you teach me? And that kind of got his head back into it. So he, you know, he really was part of my training with the futures on just understanding like how they work. But basically with futures, I use the micros. So if you buy a micro, NASDAQ, essentially, it's like 50, it's like you're owning or selling 50 shares of the Qs, the QQQ ETF. So once you look at it that way, then it's very easy to understand how much risk you're taking on,
Yeah.
or how you're going to hedge yourself. So that was the futures piece.
Okay.
The options piece was really my own research, just watching a bunch of videos that I found, but then tastytrade. So they have a 8-hour, 9-hour program on every day, Liz and Jny.
Yeah.
I will say that is really the women that I resonated with, because it's a very lonely place to be a woman who trades. And I have my husband, I have the stockbroker, they're all men, and I didn't have somebody that looked like me that was a mom. And
yeah.
So that's really where I refined options trading, was through tastytrade and watching their videos and watching Liz and Jny and building a community.
Thank you. That makes sense. I was reading this book about 2, 3 years ago now. Don't know if I'll just bring it up to the screen. It's called The Wife Drought by Annabelle Crabb.
Oh,
It's
I'm writing that down.
it's a really good book, and it's kind of very data driven, and she talks about that if only women could have a wife, they would obviously, their careers would be so much better. So and one of the things that we're not talking about is men in the home, where there's basically equality in the household, but still it's sort of expected that one will go out and earn more and one will stay at home. So if we reverse tables, we talk about women going into, and there's sort of programs, mentoring programs and empowerment programs and forums for women in finance, etc. But the missing conversation, I think, and that book really cemented my already personal experience, is that we can make a change as men to be at home equally, if not more, and that's what turns things. So there's the guilt thing that some women think, even with that arrangement, like Sheryl Sandberg was one example when she describes the thing with the husband at home, but there's that kind of guilt. But that's, I think, even men have that sense of guilt, but they're not allowed to express it. That they would like to be at home, but they're sort of pushed out early, so they get used to not feeling guilty, whereas women still are not quite in that space where they can just go, right, that's home, this is my career, and somebody's doing that, and I don't have to worry about it. So have you any thoughts on that? Sort of, you mentioned that women in trading and it's a men's world, and have you thoughts on how that could change?
Yeah, I mean, for me personally, it is tough, because you have your kids, and you have your house responsibilities, and even in my home we do have shared responsibilities, but there still is that mom guilt, and I don't know that can really ever change. But I do think that women being more accepted in the financial space as equals, and that still isn't really happening yet. I mean, when I talk to different people that work at different brokerages or for different hedge firms, you're still not seeing quite the embracement of women in the field. Yes, they're making an impact, but I don't think it's happening at the level that it could happen. But then for me, it's been finding women that are breaking through, are breaking that glass ceiling. Like, there's this woman, Mish, and she was a floor trader, and she's been in the business 40 years, and she's really embraced me, and, is somewhat of a mentor, right? And then we do the Women of Wall Street spaces on Twitter, and that gives us a community where, someone wrote the other day, why don't you have a men of Wall Street spaces? And I'm like, because men are on the spaces every day. And that's not putting down men. That's like, I love listening to men's spaces. Like, doesn't have to be, I don't want to hear men's spaces, However, when you go to the spaces on Twitter is what we're talking about, many of them are male financial trading spaces, and maybe there's a woman there, or there's two sometimes, and oftentimes, and especially the bigger spaces. And so that's been a really amazing community that we've had too, doing that Women of Wall Street spaces. Because it's allowed the women's voices to be heard. And also there's a lot of men that they want to be able to, they're not all assured about trading either. And sometimes maybe they feel uncomfortable asking questions when they're in the bigger male, male run spaces of people that have a real high level of financial expertise.
Yeah.
And ours is kind of more homey and, talk to you like you're our friend there. But also really quickly back to the Liz and Jny show, they were options floor traders as women, which is very difficult, like what my husband did. And they're moms. And so when you watch their show, they talk about their kids. They show pictures of them going to prom. Like they're trading and they're talking about their family. And that's often not what's allowed in that space, in the workplace in general. And so that was really refreshing to me, hearing them trade, talk about their kids, be excited for their kids' successes and where they were going. I don't think there's a day that they're on that they don't talk about their kids.
Yeah.
So,
yeah.
Also black box stocks is another one that I listen to. It's a options, like they do call outs essentially, but it's a legit platform called Black Box Stocks. And there are several women traders on there, and you can hear their kids in the background. And that's a pretty big community. It's not on video, so it's audio.
Yeah.
But
Black Box. Okay.
Yeah, Black Box Stocks. I think I should double check the name.
That's really cool. No, what I'll do is I'll put some notes in the recording
Okay.
when I put this up, so that we'll have that, and that's very cool. Thank you.
And can I mention one more thing? It was also on Twitter meeting an amazing community of women. I mean, believe it or not, Twitter's what really brought me with. There's many men that I like, yourself and barbecue options Bob and Mike Namolti, and then Mom Ange Trades, and she's one of my favorite people, Lane Benene. They all, and Maya, they've all been a part of my core community that has really helped, giving ideas, being friends. Many of us have met in person now. I'm flying to New York to meet a group of them in December.
Okay. That's really cool.
So we've made real friendships too.
Yeah, that's really cool. Thanks, Kim. I was just thinking about that. In fact, the kind of social media space and how that brings people together. It's almost like you find the people that you want to find after going through so many feeds from people that, yes, you kind of follow, but you don't really maybe want to connect with, or you end up sort of actually wanting to meet some people that you really connect with. And then after that, I wonder if there's almost any point in staying in Twitter, because it's so noisy that once you find that core, you kind of stick to them. You could almost just have a private group and just talk to them and do away with the rest.
We have a what, we have different DM groups, and where you do have to kind of break it down to a smaller community.
Yeah.
But it's really amazing when you build that. I would have never thought in 100 years that I would have built this amazing community on social media where I didn't know any of these people, but it's all built around trading.
Yeah. Yeah.
And it was that commonality, and really it started with Tasty Trade. I mean, I'm going to be honest. Tasty Trade was the glue. It was the real people. It felt home. and it attracted a lot of really good people. And so from that group, that's how I found Twitter, was because you can tweet Liz and Jny, and they read every single tweet on their show. So people ask them about trades. They ask them, can you place this trade? And they go through every single Twitter question. And so that's kind of how I met that core community initially, with Annetta, Lisa, Bob. Want to give them all a shout out because they're all amazing. Mike. And then from there, it expanded. That's how, I ended up meeting Angie. And by the way, the tasty traders that actually trade are amazing. And they show risk management, how to trade, how to roll your trades if you need to. Tony Batista, Jim Schultz, there's many women. That's what I loved about it. It's not just Liz and Jny. There are a lot of women traders. Mm-hmm. So that's what makes it an awesome community.
Yeah, thanks for that. And that takes me to the next question, because you mentioned the Liz and Jny show, how they talk about families and stuff. And so my next question is, Kim, how has your family been affected, positively or otherwise, by your decision to become involved in kind of financial trading? How did you approach a conversation about this? You mentioned that your husband was a floor trader, so probably not very difficult to talk about that. But was anybody else in your family who thought, that it was strange, or did that sort of how did that kind of conversation go?
I think for my girls, so I have 4 children.
Okay.
So for my girls, I think that, they like it. They see that it makes me fulfilled. They see that it is something that, mom's really invested in and interested in. And, they do ask me about it. Like, I don't know that they really want to learn it, but they're definitely they love that I'm invested in it.
Okay.
So, and at the same time, I'm in front of a screen a lot. So that's always hard for kids, right?
Yeah.
But since COVID, as we all know, I think we're all in front of screens a lot more. So I try not to. I used to literally trade at night and during the day. So I do the futures at night.
Wow.
And but it was like I was looking at the market, except for when I was sleeping 24 hours. So what I've done to scale back on that is I don't like night trading anymore, because it's just too I find it stressful. However, I think it was last Friday when Asia was way up and you guys were way up and we were down. I'm like, I'm putting on an MNQ. We're going to run. And then the same thing last night, we had gapped down 90 points. I'm talking about the NQ. We gapped down 90 points. I saw Japan was up, the Nikkei was up 1.2% or something. I'm like, I'm going to go long the MNQ. And so I put it on and I just bracketed it. So I wasn't having to watch it or worry about it.
Okay.
Yeah.
So
I watch Bloomberg at night. Because I always like to see where's the Europe market at? Where's the Asia market at? Where's the Dixie at? Where's the yields at? I mean, I do pay attention to all of it, but I also love my weekends when there's nothing.
Yeah.
I mean, I do like that I can actually shut down. And then in my counseling, I do have my jobs also, but I'm on the West Coast. So I'm up usually between 4:30 and 5:30 in the morning a.m. because our day is done. The market closes here at 1 p.m., opens at 6:30.
Okay.
So really, it's not like you're spending all day trading. You're just in the morning managing your trades or waiting a little bit to see how the market's running. Then you're placing your trades, putting your stops on or whatever. Maybe you look at it. I mean, I have it on my screen, but I'm not trading it all day.
Yeah.
Sometimes I'll trade future. If the futures are really volatile, which has been happening lately, I can play them back and forth
Okay.
a few times just for day trades, but I really don't day trade unless I'm just doing the futures back and forth and
Okay.
there's been big moves.
Yeah. Yeah. Thanks for that. I was actually thinking about asking a kind of current affairs question on trading, if I may.
Yeah.
Um, which is um, yeah, you, the inflation, I suppose, question. Um, so what do you think is, because you mentioned, sorry, this is not something that we scripted, but you've mentioned in some tweets, and also in the Wolf Financial spaces, you've mentioned how sort of property prices are being pushed up, or
Yeah.
property being valuated higher, or what you have to pay for your property. Is that right?
Yeah, well, so where we live in the states, or specifically in my state, and this is most of the states in in the United States, but there's different laws for different states and then different counties that you live in. So in my area, when the home prices drastically increased this last 2 years, my, property obviously went way up on paper.
Hmm.
However, at the same time, I wasn't selling it, right?
Yeah.
So you have an assessment every year. And it happened to be that property assessment coincided with the height of the market.
Okay.
So your property assessor of your county, they send you an assessment bill that says your property is going to be taxed at X number of value, because the taxes are paid on what the value of your property is. Well, it went up 45%.
Wow.
In a year, they raised it 45% of the value. And so they basically got it at the top of the market. And it's not like something you can appeal it, but there was no appeal because that's what the properties were selling for at the time
Okay.
in July, which means that your tax bill is based off the new assessment.
Okay.
So essentially what it does is you have a fixed price, and without interest rates changing, because here we have I have a 30-year fixed mortgage.
Okay.
So the only variable in your price changing is the taxes,
Yeah.
the property taxes. So, I mean, the amount that the taxes have gone up is quite large. And that really matters, especially for people on fixed income. I don't like it. That's a certain dollar less that I can save or use for
Yeah.
our family, spend on really expensive airline tickets,
Yeah.
for a family vacation. So, and then you wonder how is that, and that, to me, that partly affects the rent prices going up,
Mm-hmm.
right? Because, my daughter she rents in Southern Cal, San Diego, and her rent's going up $400 this year,
Okay.
$400 a month.
Okay.
So part of that is the expenses of owning the property. Yeah.
So do you think that's due to inflation, and do you think that what the Fed are doing is going to help with kind of bringing that to some kind of moderate that?
So, I mean, obviously, I'm not an economic person, but just from what I experience and read, is that we still have a housing supply crunch here.
Mhm.
So there just aren't, like, even in my neighborhood, there's been one house for sale in I mean, even in my whole kind of area, there's been one house for sale in the last 6 months.
Okay.
So, you know, if you got your interest rates really low, you're not going to sell unless you get your tax bill becomes so high.
Yeah.
You know, I don't know that that'll price people out quite yet. And then, yes, the interest rates, but I'm definitely not going to sell my house and move because I can afford my house.
Yeah.
And I have a fairly decent interest rate, though, you know, I've been in my house more years than when we had 0%. But it's not the financial crisis that happened in 2008 where everybody was levered to the hilt with their houses,
Yeah.
is my understanding. So I just don't know how that's going to really ease up. But there's inflation is impacting so many more things, like daycare costs here.
Yeah.
To put your kids in daycare have risen 25%. Like it's one kid is 15,000 to 25,000 a year, depending on the age,
Wow.
depending on where you place them, and then you can't find daycare. So it's all these kind of, I think, hidden costs. The Fed doesn't really measure daycare costs. I don't think they capture that. Maybe under services, I'm not sure.
That's really important because I have a sort of fixed idea about how this should work. Rates go up, you put money in a in an account in your bank, let's say, and they give you 10% interest. So it may not be as high as inflation, 8%, but it's certainly better than 0.05%.
Yeah,
Right?
that's for sure. Yeah.
So they're kind of like you've been hit double because you're not being incentivized to save, and you're incentivized just to either spend your money that you don't have anyway, or to put it on risky investments like crypto or something crazy that just says you'll make 1,000% a month. So it's really hard to generate income if you're struggling to make an income in this environment. And it's like, where do you go with it? You know, it's really, that's my question is what do people do? Do they buy houses? But that's not very attractive at the moment, maybe.
Yeah. You don't want to, I mean, buying a house at a 7% interest rate, that's what it is now. So people are like, so from that top in May, what we talked about, the top of the housing market, our houses have gone down quickly. So now I'm paying an inflated tax price on an assessment that I can't sell the house for. I mean, that's part of the juxtaposition also. So, you know, and also counties and governments, when we get reassessed next year, they don't like to reduce those assessments. So we're going to probably have to petition next year. And it's basically going to be on the taxpayer to say, hey, here's what the houses are selling for around me. But anyway, there's all these impinging factors on the consumer. And like you said, market's going down, can't really generate income. Well, you can get more income now than you could have in fixed assets, right? You know, CDs, our iShares here are paying 9.6%, I believe. That's the last I looked.
Okay.
One way I generate income is covered calls.
Okay.
But yeah, that's not most people that are going to be able to find ways to generate income.
Yeah. Yeah. So financial education is, I suppose, very important. But some people say it's hard to do it in schools. So then how do people educate themselves into investing or, but that's a different conversation. We're nearly out of time. So any final thoughts? Where can people find you on Twitter, Kim?
I'm at Mama Vester. So have the mom in it. It's at MOMMAVESTOR.
Great.
And it says Kim. And yeah, you can DM me for questions. I don't give financial advice, but I try to post things about psychology, trading. You know, sometimes I'll post my different strategies. Sometimes I'll show what I made on my covered calls just to encourage people. They're not YOLO trades. They're just making money on your dollars that are sitting there in like your Apple stock while the market's going down, a way to bring in income and to
Great.
reduce your cost basis. Yeah.
That's great. And if you have any other thoughts on anything, I suppose people can reach out to you and ask you questions.
Yeah.
Hopefully.
Anytime. Yeah.
Great.
Just don't DM me anything about crypto or I'm going to usually if people are asking me a lot of questions, I direct them to where I learned Tasty Trade,
Okay.
But yeah, we have an amazing community.
Sure. Yeah, definitely. That's how I've met you as well. So
Yes. Awesome meeting with you. We tried to make this work for a long time.
Yeah, I know we have. So thank you very much again, Kim, for our interview today, and good luck with everything.
One more thing I want to say. Two other great follows. I said Mish Schneider, David Keller. They do a lot of charting and macro, special situations, and Chris Cavukio. These are great, like looking at the bigger picture. Where's the market going? So you can check them out. You can DM me to ask me these names. So
great.
And they have great shows on YouTube and other stock charts, I believe.
Okay, so you can find them on just the main channels, I guess. Yeah. Okay.
Yes.
Well, thanks very much for that extra tip there. Thanks again, Kim. Well, take care. We have to go now. So
nice connecting with you.
You too.
Bye.
Bye.
Bye.